So, do say who you are and then your question.
Thanks, yeah. Jonathan Glennie at Save the Children. Not sure what I'm about to say is Save the Children's line. I'll be told fairly soon if it isn't. So,
serious.
Thanks everyone. It's a really great, event. I'm learning a lot, and I think it's really, really great discussions. I did expect there to be some kind of more, I guess, controversy about whether or not this whole push towards private sector was a good thing. That's the kind of controversy that there's been in the public sphere a little bit, especially from, I guess, the civil society sector, not perhaps as strongly in this country, but certainly across the world. Is it the case that everyone in this room basically agrees that, in theory, the idea of some aid money going towards the kind of things we've discussed, building the private sector in developing countries, building the market and all that stuff, is it the case that we're all agreed on that? That the theory is basically, we're in agreement now? And the question is the how. The question is the impact, the question is the value for money and how to separate out the money and all that stuff. Because that, I think, is quite an interesting step forward, and it implies that we're not in an ideological debate here, or even really much of a theoretical debate. We're in a practical debate. So that's my question, if the chair doesn't mind, that I'm asking really everyone in this room, because it'd be quite an interesting thing. And then going on to the impact thing, I think it's quite right that everyone who's engaged in this debate about aid to the private sector is forced to answer the impact question. But I don't think we should assume that the rest of aid, 140 billion or whatever it is at the moment, is answering that question well. You know, answering impact questions is incredibly difficult, whatever type of aid it is, and the non-private sector aid is massively diverse as well, and especially if we're talking about sustainable impact, jobs and long-term changes for your family and community, not just immediate impact. It's incredibly difficult, and there's very diverse types. So, for instance, you know, vaccinating children, I can pretty much demonstrate the impact of that. Support to civil society in the rest of the world. How do you demonstrate that kind of impact? It's so diverse, it's so difficult. So, I mean, you know, again, are the questions we're asking the private sector any different, really, to the questions we're actually asking all aid? And I think, you know, my concern is that the kind of learnings we've had about impact, you know, can anyone remember the Paris Agenda? No one in DFID seems to be able to at the moment. You know, do we need to just remember those basic things that we've learned throughout, you know, our research and apply them to the private sector in the same way we'd apply to anything? And then just finally, you know, on Kenya, I think the danger of this debate, I'm relaxed about putting money in the way we've discussed. I think it's going to be useful as a part of the aid debate. But the danger is that we start to say things like, I thought it was a brilliant presentation from Mr. Ridolfi, but I don't agree that Kenya doesn't need aid. I don't agree that it won't need grant aid for many years to come. I think there's a case to be, it's 40% of Kenyans live below the poverty line. The Kenyan poverty line, I believe that is, or the $1 a day poverty line, I don't know which, but it's very, 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 very poor. The idea that Kenya is somewhere now moved out of that, or other middle-income countries have moved out of the need for grant aid, is a very, very dangerous one. If we in the north don't want to give them money because we haven't got enough, we want to spend it on ourselves, let's say so. And it's a limited pot, fine. But let's not say they don't need it.
Great. Thank you very much. Your first question was also something I was thinking about. Someone here had a question. Oh, sorry, Paddy, was it you?
Yeah, well, whatever.
Okay, and then we have quite a few, so we'll take quite a few.
I'll try and be quick. First of all, I'm almost regretting publishing that blog this week and not next week. I quite agree that the importance of how odour is scored is, you know, I wouldn't call it a side issue, but anyway. And I agree with Rob that what I'm asking about might not be feasible. Desirable, but not necessarily feasible. Okay, so on this concern that people have that by offering all these inducements to private sector investors, what we're really doing is creating excess profits for private sector investors. I don't know whether, I'd just like to hear what the panel think about this. Would it be a crazy idea to ask to look at the returns of the private sector investors that are involved in blending and to see whether the distribution of returns, the profit they're making, looks like they're making excess profits or not? Is that a way of getting at additionality via a sort of indirect route? And then on this question of additionality, I mean, bearing in mind what I think everybody's quite accurately said, that what you should expect changes depending on, you know, whether you're market building or whether you're pushing back that commercial frontier. If we subsidise the price of a loaf of bread, we expect the quantity of bread purchased to go up, but we don't expect to be able to look at every purchase of bread and say that bread wouldn't have been bought without this subsidy, and that bread would have been otherwise. If we're looking at what the DFIs do, is it acceptable to say, look, we know that we're making investment cheaper and easier in these markets. We don't have a lot more. We can't get rigorous evidence, but not proper kind of RCT style rigorous evidence that we're having additionality. Is that? I mean, I see that described as weak evidence of additionality, but is that the best evidence that we're going to get? What I'm trying to get at is this good enough thing. Is what we currently have on additionality good enough?
Thank you. And there was a question right at the back. Yes, by the window, please.
Thank you. I'm Rupert Simons from Publish What You Fund, and I wanted to pick up on the point that Roberto Rirolfi made on the challenge of getting business and others to care about the SDGs. You said give them an index and they will care about it. You gave biodiversity as an example, and they won't care about the content. They'll just try and do well. I wish I agreed with you. Our experience campaigning for transparency is that business and the DFIs in particular do not care enough about doing well in the Aid Transparency Index, which we run roughly once a year to evaluate the quality and quantity of data produced on foreign aid. The next one comes out in about 2 weeks, and without giving you the exact results, what I can tell you is that there are agencies of all shapes and sizes that do well in that index, that are very transparent in their activities, with one big exception, which is the DFIs. And generally speaking, most of the DFIs, when I write to them each year with the results of the index and say, you're in the middle or you're at the bottom of our index, please be more transparent, publish more data on your activities, they generally write back and say, look, we'd love to, but we can't because of commercial confidentiality. Amy's touched on this. There are some of the briefing papers touch on this. So my question is, how big a deal is commercial confidentiality really? And if it is a big deal, is it time to reconsider how we exempt private investors from the sort of transparency that we are increasingly taking for granted in the public sector? Thank you.
Thank you very much. Any more questions? Yep.
Thank you very much. Celine Tan from the University of Warwick Law School. I just wanted to go back to Sheila Page's original sort of question at the session this morning. I think that's quite relevant given the comments that were made, questions from Jonathan Glennie and Rupert Simmons earlier. It's regarding this delegation of investment decisions, national development policy, to the private sector and private actors. And I think that's quite crucial given, lots of donors like DFID moving away from budget support mechanisms as an ODA instrument, particularly in terms of, do we trust the private sector? I mean, the concerns about fragmentation of development finance. What is the place of national governments and national institutions for development policy making in an environment where the financing for development is being fragmented into different pots, different instruments, different actors and different concerns and different priorities. So that's sort of my question basically on sort of the coherence, the harmonisation issues that were discussed quite extensively during the 1990s and 2000s, but sort of fallen off the radar recently with the sort of multi-actor type instrument. And my sort of a follow-up question in regards to this subsidy element is, I'm not a competition lawyer, so my colleagues are, I'm not, but I've just wondered, in terms of the blending mechanisms, how does that square up with international trade and investment obligations of countries regarding state aid, public procurement, if you've got this subsidy element in ODA? So thank you very much.
Thank you. Sheila and Graham both briefly, and then we try and get through some of these. Sheila.
Just briefly, sorry. Following up Jonathan's point, I mean, it isn't so much yes, but I'm not sure you've realised all of the risks that we know about from aid. Talking about wind farms, I did have an awful vision of infant industry arguments. And yes, they sometimes work, and some infants grow up into decent, self-sustaining adults, but some didn't. And sometimes infant industry arguments are used for senile industries, and I don't want to look at today's newspaper headlines. But I wonder if there's sufficient emphasis on exiting from any of these types of support. And the other area that worried me was on assessing the impact. I was a bit concerned with some of the talk about looking at the impact of an investment and then on those who use it and the other industries that develop, and so on and so forth. If you do that for any individual industry, you will end up saying that the entire economy is dependent on that one industry which you invested in. And if you then start adding these up, you end up with a slight accumulation problem. So I think that we do need to be a little more careful about attributing indirect effects to our pet projects.
Thank you. Graham?
Hi, Graham Gordon from CAFOD. Should anything be off limits in this discussion in terms of what public money is used to invest or to blend with private? For example, you have a recent report from the UN, from UNDESA, that looks at experience of public-private partnerships, and the overall conclusion is it has worked reasonably well in things like infrastructure, communications. In social sectors, the results are patchy at best. So if we look at some of the, I suppose, decisions within donors at the moment about how money is distributed, if more money is going to be going in through DFIs or directly to private sector, that money, it's a negative sum game. That money is coming from somewhere. Traditionally, that money is likely to be coming from healthcare, education, or some of the more social services that are still not up to the standard we require the world over. So are we actually, in some cases, robbing Peter to pay Paul? And should there be limits? And should there actually, seems though there needs to be more research done and maybe more guidance into what is this blending actually going, where is it going to produce the kind of impacts we're talking about, which are more the indirect and induced ones, and where actually do we need to make sure that aid is still going to be going to some of the other sectors where the money isn't going to come from elsewhere.
Great, thank you. So I think we're getting to some of these sort of contextual issues and some underlying issues that we haven't been specifically talking about. I think most of us know that certainly in the UK context, DFID is managing to meet the 0.7% through a certain amount of what some call smoke and mirrors, others call reallocation, where the allocation to development capital gets you there to the 0.7, but it doesn't come off the national debt, and it's a good way of, from the Chancellor's point of view, of spending money. So there is definitely some reallocation going on, and the amount being allocated to capital is definitely going up. So, Rob, although you said we need all these things and they complement each other, I decided not to push back on you and say, yeah, but actually you are shifting money from one to the other. But I think that is the context of, Jonathan, your question of are we all buying into supporting the private sector per se, and are we actually buying into this shift, and where does that begin and end? And I had already thought in the coffee break, actually, I wish we had started with a bit of a show of hands and then see if it had changed. But let's do it anyway. I'm assuming there might not be people that if you had 100 million and you were in charge of it, and it's ODA money, it's official development assistance, you're in DFID, is there anyone here who would allocate 100% of that to private sector and private sector instruments? Okay, didn't expect that. Is there anyone here who would allocate 0% of that?
No, you have one, two, few.
Okay, yep. Sorry, I should have expected that. So I think you're right, on the whole, people have bought into it, with some important exceptions. But the question is, roughly what? Who here would allocate up to 30%? Okay, a few. Who here would allocate between 30 and 60%? Not many. Gosh, so who would allocate between 60... Oh, sorry. Okay, I was going to give us 3 bands. Sorry. All right, who would allocate up to 10%? Okay, a lot of people. Now I'm going to go 10 to 30 and then onward. Who would allocate between 10% and 30%? Good sprinkling, 30% to 60%. Oh, still a reasonable sprinkling, and 60% to 99%, because we've already ruled out 100. Okay, one fund manager over there. Sorry, I'm using my internal knowledge. Okay, so we have a lot in the sort of up to 10% and up to 10 to 30. I think that really is a shift from where we were before. I was on a panel a few years ago and talking about partnerships, and someone said to me, does it worry you that your partners make a profit? And my response was, it would really worry me if they wouldn't make a profit, because the whole reason I'm in this as a development person is they're supposed to reach scale, and how are they going to reach scale without a profit? And that was only a few years ago, and the audience was really worried that my commercial partners were going to make a profit. I do think we have seen a big shift in reply to that. Panellists, you have some interesting questions here before you. We have a very specific one on transparency, on which I completely agree the DFIs are rubbish, but PIDGE is a good example. So if you have comments on transparency, let's deal with that as a specific thing. But let's also come to the bigger picture questions. How do we know if there are excessive returns? How do you think this fits with the fragmentation of the aid agenda versus the attempts to be more strategic, more national, more harmonised? Let's perhaps take those two first. Excessive profits and the overall shifts in the aid agenda and the sort of devolution to lots of fragmented players. Let's run with those. Would you like to start?
Yeah, I would have liked to address a little bit all of them,
okay.
But quickly.
Sure.
Quickly. The friend from Save the Children, the discussion is not only on giving money to the private sector, but also getting money out of the private sector, which is even more important. If we are able to show that we have convening power and brokering function, then we get a lot of money for what you like to do every day from private sector. I can tell you that. Initiatives Electrify, Agrify are showing that the private sector is willing to give money, and there we have another risk, which is reputational. It's reputational for me to Unilever because they can do land grabbing, and we don't want to be associated to that. But on Kenya, I think you got it wrong. I didn't say that they don't need grant. They do. Like China. China, they have 200 people below poverty line. Shall we give money to China? Well, I respect your view. The point is that Kenya today can do policy inside the government to address. We have a line in the European Union that we are targeting poor countries. And of course there are middle-income countries, even somehow rich countries that have poor people in them. And the question is, shall we do something? Of course we shall, but that's a different discussion from the discussion of today. On the ODA, I think, are we creating excessive profit? This is not the question. This is not the question. I think the question is, are we opening up markets that do not exist? Excessive profit, that was an example on PPPs, on a certain... excessive profit is impossible to evaluate. I want to bring you an example. Electrification of rural areas. In the past, we were doing with call for proposals for NGOs. And we have done some 250 million euros of that. What is the sustainability evaluation of that operation? Zero. Zero. After the project was finished, everything was finished. We have seen that when there was a private operator deriving a legitimate profit, if he is able to derive profit, because in rural area in Burkina Faso, I challenge you to derive a profit from electricity bills. But if they were deriving a profit, then they were expanding the access, because it's in their interest to have more connections, and it's in your and my interest to have more people connected to electricity because of poverty alleviation, right? So the two interests coincide. That's the best example. And I tell you that NGOs, CSOs, are called to cooperate with a private operator in that area, because we want also safety nets and solidarity schemes in the way he operates the mini grid for the 3,000 people. Traditionally, you start from the blacksmith, from the timber, And then you go to the houses, because houses, they don't have money. You start from the economic activities in the village to generate cash for the electricity connections, and then you go on. This is a beautiful model to show you that it works. On the transparency of fund, well, I agree with you, and that is our day-by-day fight on this confidentiality aspect, of course. The fifth question was on risk, I think. The role of somebody makes it, somebody doesn't make it. That's nature, isn't it? So we cannot expect that every action is successful to 100%. The biodiversity that Rob was mentioning, there are more commercial operations and very less commercial operations. By doing both, you ensure that a failure on one side is compensated by success on the other. That is, again, portfolio theory. We shall apply to our own risk approach. Off limit, is there anything off limit or not? I think that the question on freeing space for money, and that is also with the last point on budget support or not. You asked the question, how many, what percentage? Well, today, out of 70 billion euro, which is the financial perspective of the European Commission, about 4, 5, 6% is for private sector, strictly speaking. Is about 10% for blending, but of this 10%, the majority is for public blending, that is infrastructure with sovereign debt. Only 4 or 5%. So your percentages, the reality is that we are very hot and very, very driven by discussing about the 4 or 5%. Well, let's look at the budget support. I am a supporter of budget support when it works. It does not always work, but where and when it works, we shall do it. So we shall continue to do it.
Thank you.
Sustainability. I'm impressed that in all questions, the word sustainability didn't appear once.
I might quibble with that, but just briefly, and I do want to come back to the other panellists, could you comment on the question of state aid and competition obligations? That was clearly you. And could you also just answer this question from online? What are the prospects of the upcoming ECOSOC Forum on Financing for Development regarding investment in the 169 SDG targets? And will the private sector be at the table of this ECOSOC meeting? Kelly from Fair Trade, thank you.
I'm not organizing ECOSOC, so I don't know. I'm certainly that the private sector will be at the table. What are the perspectives of an accord? I don't know. I told you that I trust very much mainstreaming of 169 rather than ad hoc thing, but that's future. On the other issue of state aid, yeah, it's a non-question rather. The subsidy that we are talking in this room today is the subsidy of ODA into operations of development. It's not the subsidy intended as a state aid approach, because when we do provide the CDC, I guess for DFID is the same, or EIB, with a subsidized tranche of ODA to do an operation with private companies, they shall respect in the countries where they go state aid rules or whatever other rules. So the subsidies will be offered in a competitive and open and transparent manner to everybody, and therefore the state aid principle is out of the question.
Thank you very much. Amy, can I come to you on this question of, well, any of the answers, but particularly, do we trust the private sector is a sort of an underlying theme there. And have you looked at all at the issue of transparency?
Yeah, so do we trust the private sector? And I guess this kind of goes to Jonathan's question and Graham's and a bunch of others. I'm not sure it's a question of trust or not. I think the private sector is motivated and governed by their own set of rules, and that's as it is, and governments have a role in setting those rules. What I do trust, I suppose, is that, yes, the private sector is there to make profit, and until we set the rules up right and the conditions right, they don't have to think about development. And that's not a criticism of private sector actors. I think it's just a reality, and that's okay. So it is up to us to kind of set the right conditions. So I guess that kind of comes to Jonathan's question very much around, you know, I guess there is a consensus that we know we need money beyond aid, but there is still very much for me as civil society a question about, is it right to use aid in the ways that we're talking about to mobilize that money? Because can we answer that question about the opportunity or relative cost of not using that public money to do something else? Which isn't to say that we wouldn't come out on the side of saying, yes, we absolutely should do that, but I think we need a much better answer. Yeah, I guess so. I don't know. I don't suppose it's really a question of whether or not we trust the private sector. I think it's whether or not we trust the governments working with the private sector. Maybe that's the right way to put it.
Yeah.
Transparency, yeah. I mean, I think this is a really tricky one, and it's something that, you know, we fought really hard in the aid sector to get this, and it's part of the Paris and Busan aid effectiveness stuff that Jonathan also mentioned, which, you know, I think we have forgotten. And as the kind of aid landscape and the development finance landscape has gotten more complicated, we haven't necessarily taken that stuff that we learnt through, you know, lots of blood, sweat and tears, and I know there's, you know, people in this room who've been working on that for a long time. We haven't necessarily taken those lessons and translated them across. So I think what precisely the kind of principle of transparency would mean for aid or donor money is probably going to be different than how we might interpret that for a private development act or something. But we do need to kind of start copying those principles across and thinking them through. We have to kind of answer this. The commercial confidentiality one is the one that comes up again and again and again, and it's just, you know, we have to come up with a better answer than, oh, it's a little bit complicated, I suppose, isn't it?
Yeah, some challenge funds just say, if you get our money, we'll put you on the website. End of. Don't apply if you're not interested.
Yeah.
Anyway, that's another story. Yeah, we're definitely behind on that one. Richard and Rob, I'm going to ask you, well, I think it's a similar set of questions. You know, are you worried from where you sit in your respective organisations about excess profit? Are you worried about how this space affects the rest of the aid agenda and aid harmonisation agenda? Are you worried about fragmentation? And is anything off limits? Would you like to go first, gents? Richard.
ICAI doesn't do policy, so I was really wishing that I'd been on the first panel. So with that sort of context, I mean, there's really interesting questions, and we've been giving quite a lot of thought to the sort of tension there is between the sort of media pressures about giving money to middle-income countries and the very real challenges of the global goals about leaving no one behind, particularly implications for the rural poor. And you know, I think that there is an opportunity potentially to bridge that gap a little bit with some of the government's thinking on beyond aid. I think one of the real challenges is you know, where, you know, it may not matter so much if the UK moves from one area to another and focuses on more on fragile sectors. But if all donors are doing the same thing around the world, then you've got a real shift in economic power, which I think is a challenge for everyone to worry about. But as I say, we don't do policy, so that's not my issue. I mean, I think the question about super profits. Yeah, in part, it's about the design and it's the part about the governance of mechanisms and avoiding unintended consequences. And in a way, it's in everyone's interest to get that right. I mean, it isn't in the private sector interest to have, you know, banner headlines in you know, a newspaper that we might not mention the name of about excess profits, because ultimately, you know, it threatens the mutual benefit that is got through these activities. So getting the design right and avoiding those unintended consequences, and having good governance and good accountability and good reporting to demonstrate the positive things, you know, all of that are ways to address that.
Thank you very much. Rob.
I think excess profits is a bit prejudicial, isn't it? I think what I'm very much worried about, absolutely worried about, is getting the best value for money. And I think we too quickly judge to sort of assuming what we're doing here is subsidising private companies and their shareholders. And I think the key is about trying to use the resources we have, be they funds or be they technical assistance or other capabilities, policy capabilities and others, to achieve the greatest development impact. And how do we set the right incentives to achieve that framework? So exactly, it's all about getting the governance right, getting the incentive frameworks and prioritizations frameworks right. And we've got to remember, in a lot of these things, that actually the profit level is aligned with the development impact. And a successful business creates a lot of jobs and grows. And that actually in those spaces where there's higher profit levels, we're getting more development impact. But also, we're normally pari passu, i.e. on the same terms with the private sector. So the public money is also getting that return, and that is reinvested into development. So it's a cycle, and we should be careful not to be too too prejudicial in our language, I think. But I do think thinking about additionality and turning it into something where we really think about what's our value added, how can we increase our development impact through this, and thinking about it at a portfolio level. There are always going to be extreme cases which are more or less attractive, but we need to think about it as part of the overall impact that we're looking at. Then I think on the fragmentation point, I think really this comes to what I tried to speak about trying to mesh capabilities. And I think a lot of this is if we only look through one lens, so if the development community, we only look through the aid lens, and if the private companies only look through a private lens, we're not going to achieve what we want to. What we need to do is mesh together the capabilities, all the lessons learned. So absolutely we should learn from the aid landscape, just as we should learn from the private sector landscape. And we need to all go into those conversations with an open mindset of actually what is the right framework within here, what's the right governance structure to achieve the impact we want. And I think that's the view we should be thinking about this through.
Thank you very much. Actually, you know, this clock hasn't gone forward for spring, summertime, so we have another hour to go and you went for lunch. It's only 11:42. Fine, 10 questions. No, I think we do need to wrap up. I think it's been a great discussion. I'm really, really grateful to all four of you panellists and to our previous panellists. We've had a host of different perspectives. I think we've done remarkably well at relating some very different actors and perspectives to the questions that Paddy posed about impact, about how we understand impact, and about what the effective subsidy is, even though it's quite clear we cannot answer that question. What is the effective subsidy and what is the exact impact? I mean, I don't think we were expecting to answer that question. I hope we weren't, or you're going home disappointed. I think I'll end with a few summaries and a few personal reflections, and I am the editor of the Practitioner Hub on Inclusive Business, which is all about business that has a direct impact at the base of the pyramid, and I will be putting a blog on there with some more thought about reflections of what we have said today. So read that next week if you want something more considered, and I think Paddy and ODI will be following up on the ODI website. So I'm not going to try and do a complete synthesis of everything we've discussed, but it seems to me just a few thoughts. We clearly can't just come up with a formula and say, this is the input of the public resource and this is the impact, and we know that's very difficult. We've done well at identifying some of the challenges, some of which were well known, and some of them have been very much surfaced today. It's interesting that language has come up so much. I really do think that's true, having spent the last 5 years immersed with investors and businesses. It's been so nice today to be able to talk about subsidy and profit in the same event, because that very rarely happens. Confidentiality is a very interesting one. I think there's lots more that could be done on that to get past that barrier, but we're not there yet. The burden of monitoring and evaluation came up a lot, especially on the practitioner panel. I do think there's some very good thinking happening on that at the minute, but it's very pocketed, isolated. Some of the more impact-first investment funds are doing well on that, but there's loads more that could be done. We heard so much about the different types of impact and the direct impact versus the systemic. And I think on balance, what we heard from a lot of both sets of panellists is it's really the systemic change that this is about. We shouldn't just be thinking of the deal and the fact it's a high-risk deal and you bring down the risk for the other investors and they come in, which is sort of the easily understandable bit. We heard so much about the different types of systemic change, and Rob, you really helped us sort of think about this pioneer approach. I think the difference between the two is so fundamental that you almost can't have this discussion without looking at one and then the other. And for a long time in development, we've been talking about contribution, not attribution. And I think this is very, very relevant to this sector, because if you get your financial return, it's a financial return on what you put in, if you're a private equity investor. If you look at the social impact, you don't tend to talk about the social impact of the bit you put in. You talk about the social impact of the whole thing. It comes back to a whole load more double counting. If you're worried about double counting, boy, that's a classic. And so in social impact, you have to talk about contribution, because this whole attribution, you say, well, if I hadn't put my bit back in 2006, then the other investors wouldn't have come in 2010, and you get really bogged down. And I think there's a lot of unravelling that hasn't been done there, but we're definitely shifting, or have to shift to contribution, not attribution. And we also heard about how much information is missing, market information, impact information. There are great gaps. I do think, basically, it comes down to additionality. I don't think it comes down to excess profits. Some people need home runs. They're worried that in the more impactful business they won't get home runs. Home runs are the big wins you get to compensate for your losses. I think that's part of the market mechanism. If your additionality is there, if you really are making a difference in what happens now, the fact that someone gets good profits 10 years from now when that business is scaling or that market is scaling, fine, if you can prove the additionality. And that's where I really see this conversation having to go as the investors, the donors, the DFIs work out what they're doing. It really did happen not that long ago that I was told that financial people do not understand additionality. Sheila, I saw your frown at that. So I'm delighted we've talked a lot about additionality today. A couple of ways that I've seen some of these problems being worked out I just want to share, because I do think there's some practical progress. I've been results director on the DFID Impact Programme that we heard about from Rob and from Alice for the last 3 years. And the week before Christmas, we were sitting in CDC's offices trying to unravel some of these questions about the burden of M&E and what's the value of DFID investment. On the burden of M&E, we've divided businesses up into those that have data because they need it and those that don't because they don't need it. Those that have it because they need it, there's so much more they could often do to understand social impact, including who is reached, with just a bit of encouragement or maybe a bit of technical support. But lots of the businesses operating at the base of the pyramid, it's very valuable data, and they haven't been thinking about how to use it. So there's a whole opportunity there, you're right, in the solar home system and with others. Those that don't have it, there are improving tools for them to collect data relatively efficiently. You know, £5,000, £20,000 a week or two's work to give you something that is good enough for understanding a lot more about some direct poverty impact, not systemic. But we took the view that if there's more than that we require, we don't want to make these businesses uncompetitive, so we're going to fund the extra. I'm sorry that sounds so simple. You ask businesses to do a bit more, do better with what they've got, add on something simple that's going to take a month or 5,000, and then the person that wants the information, in this case at the end of a long chain is DFID, funds the extra analysis. But it's simple, but it's not just common standard practice. So I do think that is one answer. And then we were looking at the question of how do we understand at the end of 15 or actually 18 years, because this programme is fantastic, because it's not a 3-year guillotine. It's got 18 years. How do we understand the value to DFID? Because the money goes from DFID to CDC into the DFID Impact Fund, from the DFID Impact Fund into fund managers, from fund managers into businesses that engage at the base of the pyramid, and the impact then goes to people at the base of the pyramid. How do you understand that? And some people have used the best charitable alternative. Acumen developed BCOA, best charitable alternative option, where you look at the impact that is delivered and say, how much would it cost to deliver that impact through a charitable approach? It's really interesting. They've actually decided not to pursue that, and shame Tom isn't here to explain why. There are all kinds of questions there because over what time frame, the whole point of doing it through business is it is sustainable, as you were just saying. But I think it's an interesting approach to consider. The way we ended up was actually going to the other end of the chain, saying at the end of 15, 18 years, we will be able to understand something to do with the discount rate, something to do with what Paddy calls the subsidy. We'll be able to see what the kind of return is, how that's different to a market return, and we'll have to debate how much to adjust it for risk, because these are hugely risky investments, so actually your return should be really high. And then, at the end of 15 to 18 years, be able to look at what could DFID have done differently with that money. Now, this conversation was only just the week before Christmas, and it's talking about what will happen in 15 years' time when there is real data. So I think the point I'm saying is that there is progress. There's some really interesting things happening, and we've heard about so many of them today, but it's a very long journey that we are on before we can get close to answering some of these questions with any real evidence. So on a bad day, I would think in this space, hell, there's no additionality. Business is only going to reach people in the 40th to the 90th percentile. Let's go home. Or let's leave them to it. Let's not use public funds. On the good day, I think the scale of what is happening here, I don't really care whether it's a 500-time multiple or a 5,000-time multiple. The multiple is huge. That's one thing that makes me positive. The innovation is really high. We've heard about innovation today, and the innovation in the private sector is so high. This is not the only answer, clearly, but it is going to be quite a significant answer and contribution to the SDGs, and that's what I feel on a good day. So I leave you to decide over lunch whether you're a bad day person or a good day person. I really thank ODI for putting this topic right on the agenda. It's here to stay. It'll be here for a long time. I wish all of you good luck as you continue to, I wouldn't say muddle through, but carve your way through all this. And thank you, ODI, for inviting us for lunch. Please go and enjoy. Thank you. Thank you.